The global trade landscape has been shaken by a series of new tariffs imposed by the United States. These tariffs, targeting imports from close allies Canada and Mexico, as well as economic powerhouse China, have sent shockwaves through international markets. The Trump administration argues that these measures are necessary to protect American jobs and national security. However, critics fear that these tariffs could backfire, harming American consumers and businesses while escalating global trade tensions. The decision to impose tariffs on goods from Canada and Mexico, long-standing trading partners of the United States, has been met with particular dismay. The move has also raised questions about the future of the North American Free Trade Agreement, or NAFTA. The tariffs on Chinese imports have further escalated the trade dispute between the world's two largest economies. As the world grapples with the implications of these tariffs, the possibility of a global trade war looms large. The tariffs imposed by the United States target a diverse range of imports from Canada, Mexico, and China. For Canada, the tariffs primarily focus on steel and aluminum products, with a 25% levy imposed on steel imports and a 10% tariff on aluminum imports. These tariffs have significantly impacted the Canadian steel and aluminum industries, leading to job losses and plant closures. The tariffs have also affected downstream industries in the United States that rely on Canadian steel and aluminum, leading to higher input costs and supply chain disruptions. Mexico faces a similar situation, with the United States imposing a 25% tariff on steel imports and a 10% tariff on aluminum imports. The tariffs have had a particularly harsh impact on the Mexican auto industry, which relies heavily on exports to the United States. China, on the other hand, faces a broader range of tariffs, covering a vast array of goods including electronics, machinery, and consumer products. The Trump administration has threatened to impose tariffs on virtually all Chinese imports if Beijing fails to meet its demands. These tariffs represent a significant escalation of trade tensions between the United States and its trading partners. They have created uncertainty in global markets and raised concerns about the potential for a full-blown trade war. The Trump administration has cited national security concerns as a justification for imposing tariffs, particularly on steel and aluminum imports. The argument centers on the idea that a strong domestic steel and aluminum industry is vital for national defense. The national security argument has also been linked to the opioid crisis, with the Trump administration suggesting a connection between porous borders and the flow of illegal drugs, particularly fentanyl, into the United States. The tariffs, particularly those on Chinese imports, are seen as a way to pressure China to crack down on the production and trafficking of fentanyl. However, the link between tariffs and the opioid crisis is complex and multifaceted. Experts argue that tackling the root causes of addiction, such as overprescription of painkillers and lack of access to treatment, is crucial to effectively combating the crisis. Critics argue that this could lead to a slippery slope, with national security being used as a pretext for protectionist measures that harm American consumers and businesses. The tariffs imposed by the Trump administration are part of a broader strategy aimed at reducing trade deficits and protecting American jobs. This strategy involves a combination of unilateral actions, such as tariffs, and bilateral negotiations aimed at securing more favorable trade terms for the United States. One of the key objectives of Trump's tariff strategy is to bring manufacturing jobs back to the United States. The administration argues that tariffs will make American-made goods more competitive by increasing the cost of imported products. However, economists are divided on the potential impact of tariffs on manufacturing jobs, with some arguing that they could lead to job losses in industries that rely on imported inputs. Another objective of the tariff strategy is to reduce the U.S. trade deficit, which has been a persistent feature of the American economy for decades. This shift towards protectionism has raised concerns about the potential for a global trade war, which could have devastating consequences for the global economy. The tariffs imposed by the United States have sent shockwaves through the global trading system, raising fears of a trade war and prompting retaliatory measures from affected countries. The interconnected nature of the global economy means that these tariffs are likely to have far-reaching consequences, potentially impacting businesses and consumers worldwide. One of the most immediate consequences of the tariffs is the risk of retaliation from trading partners. Canada, Mexico, and China have all announced retaliatory tariffs on a range of U.S. goods, targeting politically sensitive products in an attempt to exert pressure on the Trump administration. These retaliatory tariffs are likely to escalate the trade dispute, leading to a tit-for-tat exchange of tariffs that could spiral out of control. The tariffs also threaten to disrupt global supply chains, which have become increasingly integrated in recent decades. Many businesses rely on components and raw materials sourced from multiple countries, and tariffs could disrupt these supply chains, leading to higher costs and production delays. The International Monetary Fund has warned that a trade war would pose a significant risk to global growth, potentially pushing the world economy into recession. Canada and Mexico, taken aback by the unexpected tariffs imposed by their North American neighbor, have responded with a combination of counter-tariffs and diplomatic efforts. Both countries have made it clear that they will not accept the tariffs lying down and are prepared to defend their interests on the world stage. Canada has announced retaliatory tariffs on a range of U.S. products, targeting goods from states represented by key figures in the Trump administration. These tariffs, carefully calibrated to inflict political pain, are designed to pressure the U.S. government to reconsider its actions. Canadian officials have also been actively engaging in diplomatic efforts, reaching out to U.S. lawmakers and business leaders to highlight the negative consequences of the tariffs. Mexico has adopted a similar approach, imposing retaliatory tariffs on a range of U.S. agricultural products, including pork, cheese, and bourbon. These products were strategically chosen for their political significance, targeting states that are important to the Trump administration's electoral base. The tariffs have strained relations between the United States, Canada, and Mexico, casting a shadow over the renegotiation of the North American Free Trade Agreement. China, facing the brunt of the Trump administration's trade actions, has responded with a calculated and strategic approach, combining retaliatory tariffs with efforts to portray itself as a responsible actor on the global stage. Beijing has made it clear that it will not back down in the face of U.S. pressure and is prepared to engage in a protracted trade war. In response to the U.S. tariffs, China has imposed retaliatory tariffs on a range of American goods, targeting products that are politically sensitive and economically important to the United States. These tariffs, carefully calibrated to inflict maximum pain, are designed to pressure the Trump administration to reconsider its actions. China has also sought to rally international support, portraying the United States as a bully and highlighting the negative consequences of its protectionist policies. Beyond tariffs, China has also employed other economic levers to exert pressure on the United States. For instance, China is a major holder of U.S. Treasury bonds, and it could choose to sell off some of its holdings, which could drive up interest rates in the United States and harm the U.S. economy. China's response to the U.S. tariffs highlights the high stakes involved in this trade dispute. The tariffs imposed by the United States have injected a significant degree of uncertainty into the global trading system, raising concerns about the future of globalization and the rules-based order that has governed international trade for decades. The tariffs have exposed the fragility of the global trading system, which has come under increasing strain in recent years. The rise of populism and protectionism, fueled by concerns about job losses and income inequality, has eroded support for free trade in many countries. The Trump administration's aggressive trade policies have further exacerbated these tensions, leading to a breakdown in trust and cooperation among trading partners. Navigating a path forward will require a concerted effort from all parties involved. The United States will need to reconsider its go-it-alone approach to trade and engage with its trading partners in a more constructive and cooperative manner. Other countries will need to stand up for the rules-based trading system and resist the temptation to resort to protectionist measures. It is in the best interests of all countries to work together to de-escalate the current trade tensions and find a path towards a more open and rules-based trading system.